I want to welcome in, without any further ado, Jonathan Faison joining us from Georgia this time. You know, we're usually in tropical climates, man. You're usually in Peru last time we talked. Was that correct, or where were we?
It was Costa Rica.
Hey, Costa Rica. I was just north of there in Nicaragua last week, so it's a
Okay.
hard place to leave. But look, I want to give you credit where credit's due, man. You joined us last time, and your picks have been crushing it in just a mere 3-4 months. So I know we've got a graphic to show the companies that you shared with us. SNDX up over 50%. I'm also a subscriber after last episode, and you had a pick in there that almost doubled. LQDA. And then, of course, you were an advocate of the XBI as well, which is up a nice double digits with an ETF in 3 months' time. So what do you make of this? Is this the fluke, or how would you explain this if someone challenged you on this? Hey, man, you just got lucky. Now tell me what your research was that gave you the conviction to know these names are going up.
Okay. Great question. I'd say first off, the right burden of proof is, in these bull markets, we all look like geniuses. So you have to be able to extend that performance over a longer period of time, up and down cycles, as you know. Liquidia has been a very interesting story. The bear case there, they have an IP case, the judge decision coming up against a far larger player. And that's with Tavaso DPI from Uthera. And Liquidia, one of the bear case there is that the so-called skinny label, that it's approved right now for PAH and PAH-ILD. And right now, the majority of the patients coming on to the drug have been PAH. So even in the very, very worst case scenario that they lose the ILD indication, it's revoked from the market. I would view any sell the news reaction as an opportunity to buy more. We took partial profits, but it's still around 8% of the portfolio. I do caution people, any day now, the judge decision could come. So you want to make sure that you plan for all scenarios, including a negative one too.
So just for people that aren't as experienced, a skinny label is essentially they've narrowed how you can use, how the drug can be prescribed. You can always use off label for different doctors, but you're saying it already has a very narrow label for basically two indications, and that they may lose one, but most of their sales have been coming from that first one that's not in jeopardy. So therefore, it's not a huge risk, worst case scenario.
Sure. It's actually a wide label in that it has both of those right now. And the most likely scenario would be maybe they owe the larger company a small royalty, et cetera, which would be actually a really good scenario, a de-risking a clearing event. And I don't think the skinny label would happen. This drug, Eutrepia, is actually, they're able to dose it a lot higher with better tolerability than the comparator, and so these higher efficacy at higher doses. So it'd be a very outside scenario that the FDA decides to remove it from the market. But again, anything's possible in IP, and you want to plan for all scenarios.
Yeah. So two observations from you. One, I love how you started with the bear case on a stock that you're bullish on. I've never seen that before. I give you credit for that. I'm going to steal that methodology and use it elsewhere, but I think that is a testament to your humility. And that's the second thing I want to bring up. You didn't start off as a biotech investor, right? You, again, we shared this, your kind of story on the first episode, but I want it for new people listening. This isn't where you were schooled. This is not how you were trained. You didn't grow up with two genius scientist parents that you just through osmosis learned everything. You're self-taught. So how did you go about that? Just what are some tips that you can share with other people that have never invested in biotech to be on a path to get to where you're at?
Great question. I was a very stubborn learner. It took me a lot longer than it needed to. Biotech has a steep learning curve. And if you can find community, whether it's on, Bio Twitter, X, or in Rody Biotech community, our service, wherever you find it, surround yourself from smarter minds. With smarter minds. So I feel like anything I've learned is my system is an amalgamation, a mixture of things I've learned from, whether it's other veteran investors, other friends who've been in the game far longer, fund managers, you name it. And so you learn from your own mistakes. We have a page of winners and losers, and we show all the losers, the ones where, I woke up to those 90%, gut punches in the morning where you got it wrong.
Yeah.
And anytime you're losing money in a specific area of the market, or a biotech, that might be the market telling you, hey, this is where you don't have an edge. And so if you continually eliminate those areas where you don't have an edge, you see what you're left with.
So where have you been able to develop an edge in biotech? Because particularly as a generalist to start, I mean, same here. I don't have any specific scientific background, but where did you see, or where do you feel like you have an edge now in biotech, and why?
Sure. We've had a good 3-year patch of late. And so my goal is not only to compound gains, but not to give gains back to the market. And that's what I like about commercial stage biotech with these companies that have approved drugs. The beauty is there's at least some downside cushion there. And while you noted wisely about the M&A wave, another interesting trend in biotech is the number of profitable companies. Normally, there's a lot of science projects, companies that maybe came to the market too early. That happened a lot during the last biotech bubble and that burst in 2021. And this time around, you have something like 30 to 40% of companies getting to that profitability range, the number of profitable companies doubling by 2027. And that's good for us because that's my hunting ground for new setups around. Right now, the portfolio is around 80% commercial stage and 20% clinical stage. And for me, that's a sleep well at night decision. As you said, defense is boring, but it does win championships.
Yeah, and listen, I think that's an important distinction for our viewers to understand, is that you do focus on the commercialization stage, where I have always gravitated to more risky early stage, speculative, that don't even generate revenue. At what point do you talked about just fertile hunting ground? Are you looking for FDA approvals, and that is the kickoff or the catalyst for your research? Are you following phase 3? I mean, where do you start your filter to find new opportunities?
Sure. A filter, the easy way to think about it is I don't want science projects, where companies are throwing a certain tech or platform or target against the wall and seeing what hits, but I want a clear path to market. So a good example to illustrate would be in our portfolio, Kura Therapeutics, CGM, and their AML drug is early on, but what's nice is it has a clear path to market and via accelerated approval, potentially in AML. And so that would probably be the earliest stage one we have, but clear path to market for me is a must. If there's any, science projects elements to it where there's not enough data or we can't gauge when or how, it's just not for me. I just know my track record there is too poor to justify it.
Yeah, and then how long do you typically take researching a new opportunity? Because I think in our day and age of instant gratification, people are like, hey, here's a ticker, I'm going to go buy it. What's your normal diligence time frame before you actually put a single dollar behind a new idea?
Great question. So we have something called playbook, which I like to think about it like chess, where you're trying to think a few moves ahead in the future. And so I like to have a list of pre-vetted names where I've already done the work on the setups, and I'm sitting on those weeks, months, even several quarters, and I only pull the trigger when I feel comfortable. I don't know about your viewers or for you, but in my case, one of my weaknesses is FOMO trading, where if I'm doing poorly, I'll trade more often to try to make the gains back. So one of my rules is I'm only allowed to trade 2 to 4 days per month. And that makes me sit back, wait patiently, and only pull the trigger when I'm feeling confident.
Interesting. Now, how do you enforce that? That's just complete self-discipline? Because I love that, but I don't know that I could adhere to that, because I would have a rule to never eat pizza again, but I'll turn around and eat it tomorrow because it's too good here in New York.
Sure, it's just quality over quantity. I started investing in 2008, and I've seen that what overtrading can do. I've seen I always regularly go back and review my trades, and I can see the unforced errors. And during the biotech bear market, I had 1 year where I was frantically overtrading, trying to plug the hole. And it was humbling to see at the end of the year, my performance would have been better if I had not traded at all. And for me, that was the light bulb moment where I was like, okay, quality over quantity. And we've had this good stretch here where 2023, the portfolio returned 117%. 2024 was just 14. And last year was something like 80%, but it's been all with fewer trades, higher quality, letting these management teams, high quality management teams that are executing, let them do the heavy lifting instead of you just trading and trading and trading, if that makes sense.
No, it totally does. I mean, there's that meme or quote gets shared. I can't remember who it's attributed to, that, the best investors can sit around and do nothing for long periods of time. So you're proof positive of that, right? So making it happen. So just out of curiosity, how many positions are in your current portfolio? And do you have a max? Like you won't go over 10 or 15?
Sure. So average is 10 to 15. Currently, I think it's around 12. I've just found that if I go past 15, it'll either be, instead of diversification, diworsification, and the quality of the overall due diligence goes south as I spread myself too thin.
Yeah, no, that makes sense. It's a lot to keep up with. Let me ask you this. I got to put you on the spot a little bit. What's one of those names that's on your playbook that you're really excited about that you can share with people that aren't a subscriber right now that you think could be the next purchase if you're willing to share?
No, sure. I'm glad that you mentioned Syndax before, as far as we're up 125% in that one, and it's a menin player, so the first menin inhibitor approved for AML. And interestingly enough, its competitor is Kura Therapeutics, Kura, and Komzifti was just approved in NPM1 positive AML for the relapse refractory setting, and the share price has since gone down, and the company is actually trading at negative enterprise value, or less than the value of cash on hand. So it's already around
Interesting.
an 8% portfolio weighting. The maximum I'm allowed personally to accumulate, so I don't get overconfident, is 10% of the portfolio. So in playbook, one of the things I have written down is I would like to keep adding to that one, to the limit that I'm allowed to.
So
Paying
again,
into.
let's back it for people that don't immediately understand. I mean, it's trading
Mhm.
below cash levels. How much revenue is it generating so far? I mean,
Oh,
what's
mhm.
the delta here? I mean,
Sure. NPM1 is actually going to be a slow launch out of the gate, one would think at least. It's around 30 to 40% of AML, I believe they said. And management's been guiding conservatively. The mutation itself is actually a positive prognostic. So patients that have this mutation actually tend to do better. But when they relapse, that's the part that's negative for the patient. So it's not this mutation itself. And there's other drugs, other overlapping mutations like FLT3, and so when you have these other drugs, this competition, at first, it could be slow out of the gate, but it's a neck and neck race between Syndax and Kura to pursue combinations in first line AML, which is the big pie. And they're both in pivotal trials now. Syndax might have a little bit of an edge in the efficacy, but they also have a QTC prolongation, other harsher side effects, whereas Kura is trying to compete on the overall benefit risk profile of the drug. So instead of it being twice a day oral, it's once a day oral. They don't have to adjust the dose based on other drugs, other dose limiting interactions. And from that standpoint, plus the safety profile, many docs might choose that first for combination setting. Personally, I like both, but this is a good example of a basket approach to
yeah.
biotech where you don't have to pick just one of them.
So you own both. So that your
Correct.
initial research into Syndex led you to Cure Kura, I believe is the ticker. Is that how it came about, or did you know both in advance and just kind of picked one to start?
Sure. Syndax we chose first. We did not enter it until, and this is important for biotech commercial stories when they're launching a new drug, we waited until there were positive launch metrics so we could see the sales, the demand accelerating. And that's when we entered Syndax around the $9 range. And so Kura, I waited until the actual approval of the drug because the FDA has been a little bit increasingly, let's say, unpredictable these days. So I preferred to have no risk of a complete response letter. So we entered it after the approval on a dip. And unfortunately for us, the dips kept dipping. So out of my 12 positions, only 2 of them are in the red. And Kura is one of those. I believe I'm down something like 28%. But again, the game plan has remained unchanged where I plan to accumulate these dips up to my maximum allowed of 10% portfolio.
So I'm stealing so much from you. The dips keep dipping, diversification, and bear thesis before the bull. What do you think? You're talking about it being down 28%. I appreciate that candor. I know your track record's public for your subscribers, but how do you think about when it's time to move on? Do you have a specific stop loss or maximum loss where you're like, hey, I'm forcing myself to move on since you are so self-disciplined? Or is it really situation by situation based upon what the fundamental story is?
Great question. So when I'm entering these stocks, I'm looking at a multi-year time frame, ideally looking at where the sales or the pipeline are going, 2026, 2027, 28. But again, as I've learned from others, this isn't original to me. When you start out each morning, I always say that your favorite stock today could be the one you sell tomorrow if something changes. And so imagine that you don't own any of the positions you actually own right now. Imagine all you had was cash. Then look at those positions and ask yourself, if I didn't own it today, would I still buy it today? And another aspect of that is our portfolio cage match exercise, where I'll compare a holding of mine, let's say Kura, to one of those new ideas on radar on playbook that's popped up in my scans. Compare the risk, compare the upside, compare the degree of uncertainty or the risk factors, and the winner, much like a UFC match or something, is the one that gets the money.
No, I love it. So let's, before we wrap here, I always want to give people an opportunity to tell where everyone can find you, right?
Sure.
I'm a subscriber, so I'm a happy subscriber. Obviously, your track record speaks for itself. But why don't you share with everyone what the Rody Biotech community is about, where they can find you? We'll put a QR code up on the screen to make it easy, but we'd love to hear it directly from you.
Oh, sure. Thank you. So Rody is about 500 members, give or take. We have both experts as well as novices. What I like about our chat is we're all sharing what we learned, what we are learning, and we want to see each other succeed. For me, it's more about, much like the stock picks, quality over quantity. So we're not looking to add huge numbers, but what I like is when we're adding quality individuals, whether it's somebody with knowledge or it's just a novice who's looking to learn, it makes the overall quality of our chat room, of our discussions better. And that's what's more important to us at this point.
Well, listen, I'm going to strongly encourage everyone to scan that QR code that was on the screen. Check it out. I want to thank you again, man. You're one of the most impressive guys I interview because of your humility, your track record. And honestly, you have amassed a knowledge base here in biotech so quickly. And maybe it seems like a long, painful road for you, a lot of expensive lessons. But as an outside observer that's known you from afar, and I know a lot of people that have been subscribers of yours for a long time, we have shared clients. I just want to compliment you, man. It's impressive. Want to wish you the best of luck. Would love to have you back on in another 3 months to see how much you're kicking ass still, because I know that's going to be the case, man. So if you can make time from Costa Rica, we'd love to have you again.
Hey, look forward to it. Thanks, Lou.
All right, brother. Safe travels back home.